Let's just jump into this, guys. We got some noise to make this morning. Digital asset investor tweeted out yesterday, "We are not letting it go. Hashtag investigate Jay Clayton." I am all about that. I've had a lot of you ask me why I have such strong conviction in the Ripple versus SEC case, and this is a big part of it. So we're going to watch a couple videos that he put together and then a couple other things. And yeah, I think you'll get the point. Let's check these out.
Well, we have another Wall Street insider from one of the white shoe firms, Jay Clayton, one of the largest defense firms, Sullivan Cromwell on the street, that has done work on behalf of broker-dealers for decades. So essentially, when a Wall Street firm gets in trouble, whether it's with one of the regulators or they get sued by the plaintiff's bar, these types of the firms that Jay Clayton comes from, defends Wall Street. Now, you and I have talked about this before, and the biggest problem we have with this, let's grab someone from a Wall Street defense firm like Jay Clayton and put him in charge of the regulatory function like the SEC. It's called the revolving door, where these very highly qualified lawyers come from Wall Street and they go to the regulators. So they go from defending the Wall Street firms to overseeing and regulating. So they're sitting on one side of the table as a defense lawyer, and then quite frankly, within a week or two, they're now sitting in the regulator chair, regulating their old clients, their old friends at their firm. And it's the revolving door, back and forth, back and forth. And as a result, you get this old boy network, all from Ivy League schools, all highly educated, going back and forth from the regulatory side to the defense side. And it's a very chummy, very close relationship that no one wants to ruffle any feathers. Because think about it, if you're on the regulatory side and you cause too big of a problem, you're really banging heads. You go in there and you really come in with a big stick and you really go after people aggressively. When your term is over with the SEC and you've ruffled too many feathers, you've carried too big of a stick, who's going to hire you back on the defense side to represent the people that you, for goodness sakes, you just tried to put in jail or you just tried to go after? So it creates this very incestuous, chummy relationship called the revolving door, back and forth. And we have had this problem over and over again.
This video here is a little long. It's 7.5 minutes long, but if you are interested in this topic, this is well worth the watch. Check this out.
Thank you, Mr. Chairman. It's good to see you again, Mr. Clayton. You know, a big part of the job of the chairman of the SEC is enforcement, a cop on the beat on Wall Street. And you've said in your testimony today that you intend to enforce the law strictly, and I very much agree with that goal. But I'm concerned that you won't be able to achieve it. It is clear that the SEC will play a critical role in deciding, the SEC chair will play a critical role in deciding what the enforcement position of the SEC will be. And in recent history, Republican commissioners on the SEC have favored weaker enforcement, while Democratic commissioners have sought tougher enforcement. The chair is often the deciding vote. And of course, if the chair can't vote and the remaining SEC commissioners split along party lines, then major enforcement actions don't go forward and serious wrongdoing may go unpunished. So it's important to think about how often the SEC could be caught in such a deadlock. Under the president's executive order for ethics, the first 2 years of your tenure as SEC chairman, you would have to recuse yourself from participating in any enforcement matter involving a former client of yours. That's about half of your term as chair. So based on your personal client disclosures then, for half of your tenure as SEC chair, you would not be able to vote to enforce the law against several big banks, including Goldman Sachs, Deutsche Bank, Barclays, and UBS. Is that right?
Yes, Senator.
Thank you. Those banks have repeatedly violated securities laws in the past few years, but if they violate securities laws again in your first 2 years as SEC chairman, you can't vote to punish them. And I think that's a problem. But it's just the tip of the iceberg. Your recusals would not be limited just to your own former clients. The ethics executive order also requires you to recuse yourself for 2 years from any matter in which your former law firm, Sullivan and Cromwell, represents a party. Now, Sullivan and Cromwell is a leading New York law firm with a very long list of Wall Street clients. So for half of your term as SEC chair, you would not be able to vote to punish any corporation or bank that uses Sullivan and Cromwell as their lawyer. Is that right?
I believe that's a fair summary, Senator. Yes.
Thank you. More potential cases with a deadlock and no enforcement, and that's a problem. And even beyond Sullivan and Cromwell's already long list of Wall Street clients, any reasonably strategic company that wanted to try to avoid an SEC enforcement action could simply hire Sullivan and Cromwell to represent them before the agency, and then you couldn't vote for enforcement against that company. Is that right, Mr. Clayton?
I'm not sure about that, Senator.
Well, you do know the rule that if they are represented by Sullivan and Cromwell in front of the agency, then you're going to be banned from being able to vote against them.
If they are represented by Sullivan and Cromwell in front of the agency, I would not be able to participate.
That was my point.
That doesn't mean that.
So more cases potentially that you cannot participate in, meaning more cases potentially here with a deadlock and no enforcement. I think that's another problem. So it's important to think about how often, as we go through this, if President Trump wanted to make sure that the SEC would have a hard time in going after his Wall Street friends, it seems to me you would be the perfect SEC chair. You can't vote to punish some of the biggest names on Wall Street. That means those cases would be at least more likely to end up in deadlock, which means those companies could skate free. And I just want to point out, this is not a theoretical problem. Recusals were a very big issue for the outgoing SEC chair, Mary Jo White. Like you, she came from a major Wall Street law firm, and according to the New York Times, in her short time heading up the SEC, she had to recuse herself in at least 48 enforcement matters because of conflicts involving her former clients, her former law firm, and her husband's clients and law firm. At least 48 cases in which she couldn't vote to punish a big company because the other commissioners were often split on enforcement matters. Chair White's recusals led the commission to deadlock time and time again, which meant that corporations that may have broken the law were able to get off easier. Your recusal problems seem to be even more severe than Chair White's. With you as SEC chair, it looks like Wall Street can breathe a little easier knowing that you won't be voting against them, and there's likely to be weaker enforcement. So here's my question. Can you explain why, out of all the people who could have been selected to head the SEC, you are the right person for this job?
Thank you. And I want to say that the question of whether I'm recused from a matter doesn't mean that there will be deadlock. I do believe that the current
Mr. Clayton, I don't quite understand that. If there's not a majority to go forward on an enforcement action, if the other commissioners split 2-2, that is a deadlock. And if you are recused, that leaves 4 commissioners, 2 Democrats, 2 Republicans. Republicans have consistently gone for weaker enforcement, Democrats for stronger enforcement. You come here today and say, I'm going to go for stronger enforcement. You're not going for stronger enforcement if you can't vote.
Well, I'm not sure about that characterization, but I do know that
the characterization of a deadlock?
No, the characterization of who goes for more enforcement.
Well, take a look at the data on that.
Okay, but what I would like to say is that I believe that on enforcement matters, the commission is almost always unanimous on enforcement matters.
I think you want to check your numbers on that, Mr.
Okay.
Clayton. And you want to check what has just happened. We have experience on this. You know, I'm going to yield because I recognize the chair has been very indulgent in letting me go over. But I just want to underline the point that holding Wall Street firms accountable is a major job of the SEC's mission. And the SEC chair needs to be able to participate in those enforcement actions, to be the cop on the beat for the American people, not on the sidelines when former clients and Wall Street firms are able to skate free. And I think that raises a very serious concern about your nomination to be chair.
Senator Rounds.
Thank you.
We got some more concerns coming your way right now. Stay tuned, people. It's getting better.
Fraud. Speculative, and speculation drives innovation. So they're very important in creating foundational infrastructure.
Without registering with us. And folks somehow got comfortable that this was new and it was okay and it was not a security, it was just some other way to raise money. Well, I disagree with them.
So it is not new, it is new, but it is not okay and it is not another way to raise money.
Correct.
I am understanding you to say it is a violation of the law.
Yes.
You know, registration really matters. When companies don't register their tokens as securities, they can hide information, and the SEC does not have the information it needs to monitor this market.
I am perfectly happy for these people to do private placements, but do them right. Don't try and do it as a private placement, but get all the benefits of a public
And then
offering.
lever over into a public
And do all the
offering.
other shenanigans that are.
Well, good. So should I take today as you're sounding a warning bell for people? Maybe they better pay a little closer attention to the law, or the SEC is going to pay closer attention to them?
Yes, and it's not the first time, but I really appreciate the opportunity to do it today.
Okay, so I'll talk a bit about the funding model. So we will have a fundraiser for 2 months starting February 1st. It will be available at funds.ethereum.org. So the part of the initial issuance will be 1,000 Ether for 1 Bitcoin, or up to 2,000 Ether for 1 Bitcoin if you get in early to compensate for the increased risk. So the issuance model is that we will fundraise. Suppose that we hand out X Ether through the fundraiser, then there will be about 0.5x will be pre-mined, and then 0.4x after that will be mined per year forever.
And that's Vitalik Buterin, guys. That is pretty much the main guy of the Ethereum network. So keep paying attention. We got more.
But there are other altcoins out there. There is Ether, for example. There is Ripple. Is Ether a security?
So, Bob, I'm not going to comment on specific crypto assets and whether they are a security or are not a security, but you captured the definition very well. You know, am I giving you my money for you to go off in a venture, or I'm relying on your efforts and the efforts of your colleagues?
In order to fund the project, we conducted a sale. We sold the token Ether for Bitcoin, and all of the receipts, 9,000 different receipts, were actually stored in a decentralized way on the Bitcoin blockchain.
This is why I've earlier this year said I think that most of them are. I think Ether, when it was done in 2014, would pass this test. When I say pass, it means it's a security.
But there are other altcoins out there.
And that last guy was Gary Gensler, the new head chair of the SEC. Continuing on. When Jay Clayton issued the lawsuit against Ripple on his last day in office, a couple months later, he went to work for One River Digital Asset Management, a parent company of the newly launched digital asset fund, One River Digital. Institutional Bitcoin firm One River Digital is backed by a billionaire hedge fund manager, Alan Howard, and has invested $600 million in Bitcoin and Ether for institutional clients. It gets better. Some Jay Clayton archives. Before joining the SEC, we know that both Clayton and Hinman earned massive fees to support Chinese tech giant Alibaba Group carry out its 2014 IPO on the New York Stock Exchange. Where we go? On January 20th of 2017, Jay Clayton was nominated chairman of the SEC by Donald Trump. Despite widespread concerns regarding numerous conflicts of interest, he was ultimately confirmed and sworn. William Hinman was directed. So upon his appointment to the SEC, Hinman left his post at the law firm Simpson Thacher, which sits on the Ethereum Enterprise Alliance and represents cryptocurrency-related financial interests. He continued to receive millions in financial payments from the firm. In short, Hinman had a clear financial interest in any regulatory action by the SEC related to cryptocurrencies while serving in a top SEC position. It was something that one former SEC ethics lawyer said was a little unsettling. In 2018, Clayton publicly declared Bitcoin not a security, sending the price of Bitcoin through the roof. During the 2018 Finance Summit in San Francisco, Hinman then declared that the Ethereum token was not a security, and it then skyrocketed. On December 22nd, which was Clayton's last day in office, the SEC division led by Berger filed its lawsuit against Ripple and its executives, alleging XRP sales over 7 years were unregistered security trades. The complaint indicated all sales were illegal, therefore ensnaring millions of retail XRP holders who have never heard of Ripple but traded the digital currency for years. The price of XRP then plummeted. So Berger then announces his resignation a couple weeks later. Around that same time, Hinman goes back to Simpson Thacher, continues to sit on the Ethereum Enterprise Alliance, and he received over $15 million from them during the time of the SEC. Where are we at here? On March 21st, Clayton accepted a position at One River Asset Management, which is a digital thing focused exclusively on Bitcoin and Ether. And then on April 15th, Berger joined Hinman as a partner at Simpson Thacher. I find that pretty interesting. So you look at all that stuff, and I mean, it just seems like it's one big smoke and mirrors, let's line our pockets operation to me. Since we're here on Crypto Law US, this is John Deaton's website. He is the one leading the class action lawsuit in favor of the XRP holders against the SEC, trying to intervene, which is right here. There's more about it here. Yeah, so make sure you're following John on Twitter. And that's going to do it for the video. I just wanted to point out all the corruption, and it's just all Bitcoin and Ether, Bitcoin and Ether, Bitcoin and Ether. Everything these guys are doing is Bitcoin and Ether, Bitcoin and Ether. And the one that they know, and they know it, is going to destroy both of them if it gets the chance, is XRP. And the only way to go after XRP was to go after Ripple. And here we are today, constantly being pushed back. We got another 60-day wait. The case might not be resolved until next year, or you could get a settlement any day. Stay tuned, folks.